your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Our next session revolves around the evolution of clearing, custody, and also secondary markets, really utilizing blockchain technology. So to lead this conversation, please welcome Nisa Amoils of A100x, Kyle Sonlin of Security Token Market, Douglas Borthwick of INX, Adam Blumberg of Interaxis, and Julian Svirsky of Atlant.
Okay, that was fun. So we're going to have even more fun on this panel because we're the penultimate panel. And everybody hung around this long. So welcome and thank you to Draper Goren Home. I am Nisa Amoils of A100x Ventures, which is a venture capital fund. I invest in this ecosystem, have been for years. Companies like Bertalo and Securitize and Aspen Coin, etc. And I'm a securities lawyer, also part of the Fin P2P group that was announced today as well. So I'm going to ask all of the panelists to introduce themselves. Why don't we start with Kyle?
Hey everyone, my name is Kyle Salman. I'm the CEO of Security Token Market. I'm the host of the Security Token Show podcast. My background is in secondary market infrastructure and all the trading assets here. So I'm really excited to dig into the panel, know some of you folks here on the panel as well, and appreciate everybody for tuning in. Looking forward to the discussion.
Julian?
Hi, my name is Julian Svirsky. I'm CEO of Atlant. We have several different platforms at Atlant. Carta, which is a B2B host and guest marketplace, and 2 exchanges. Uvas, which is a securities exchange, which is 95% cheaper than incumbent exchanges. And also, as of recent, Redat, which is a sophisticated crypto exchange that has options, futures, repo, and quite a few other interesting things.
Adam?
Hi, everyone. My name is Adam Blumberg. I'm a certified financial planner. I have an RIA in Texas. I'm also the founder of Interaxis, where our goal is to help educate financial advisors and help educate anyone who's looking to get into investing and understanding blockchain, digital assets, cryptocurrency.
And Doug?
Hi, I'm Douglas Borthwick. I'm the CMO of INX Limited. Background is a currency trader, Morgan Stanley, Merrill Lynch, a whole bunch of different places. Got into blockchain a couple of years ago, and excited to be here.
Great. So we've been hearing all day about liquidity, and that's what we're focused on this panel. So, Kyle, we've talked a lot about what liquidity actually means, and it doesn't only mean trading and exchanges. So how do you define liquidity? What's happening in this market now?
It's a really interesting question because it is something that I think is misconstrued often, that we see from whether it's an investment perspective, whether it's an issuer that's looking to access private market infrastructure. And I think you hit the nail on the head. The reality is that liquidity isn't something that you just turn on, right? The ability to trade something, as I'm sure Doug can allude to with his experience with INX, just the ability to trade something isn't necessarily the only factor here in liquidity. You need to really establish investor demand for a specific asset that actually will create that demand and that trading volume for something. And that's really what defines liquidity is, from a technical term, you're talking about how much the price changes based off of a significant buy or sell order. And really what that translates to everyone else is just how many people actually care about this thing, and really, you know, how is that moving from one person to another? And that's something that you need to build, just like you would build a community or build a strong investment relations team and all those other pieces as well. So liquidity is a very complex topic that comes with price discovery, that comes with transparency in the asset, as well as the information surrounding it and its shareholders, and how the company is building itself and reporting those things to the public. So there's a lot of different pieces there, and it's something that I think we, especially with the security token space, we really, it took a lot to get to the point of actually being able to trade these things. But that's really only the first hurdle in the process. The next piece is then figuring out, okay, now that we can trade these things, now that we have the ability to, how are we going to actually facilitate a strong and robust market for these specific assets? And I think that that's really the phase that we're in 2021 now.
And would you agree that there's a lot of the value chain that hasn't been built out yet, from market makers to analysts and price discovery that we have in traditional markets, to, you know, actual data on spreads of trading? I mean, all of that really needs to still be part of the infrastructure build out till we achieve full liquidity, right?
Yeah, I think that that's true. I think that definitely with investor demand, it comes with high quality assets, and that is still a different piece of the puzzle here that we're still looking to build. I think the last panel was really focused on real estate and tokenized real estate, and that's something that is really an asset investors are really excited about, but we're still seeing that on such a small level that I don't know if there's justification yet for large market makers to enter into the space, for example, and especially for a lot of these private markets, they don't even necessarily work directly with market makers. And you know, from an analyst perspective, we've been doing a lot of research on that front, but these things don't trade quite as frequently as what you'd see from the public markets, at least yet. And I think that those things are definitely along the way, but I think that there's also, from a liquidity perspective, this interest is driven by new and exciting exotic assets, and that's still, I think, the piece that we're looking for from the secondary markets.
Doug, why don't you talk a little bit more about what you're doing at INX and how that could help with your reaching retail investors, for instance, to really build awareness about what assets are trading?
Well, I mean, let's just talk, let's do a couple of things. First of all, if you want liquidity, you can't charge 2.5% to get into something and 2.5% to get out. So the pricing that exchanges give today isn't saying, hey guys, you're welcome to come here and trade. And I think that what INX is going to do is absolutely crush that price down considerably. But not just that, you know, you can't believe that when you have maybe 5,000 or 10,000 accredited investors on your platform that you're going to get liquidity. Maybe 5% of them will log in every day. You've got to get retail trading this product. If you think about guys on something like Robinhood, they're trading on it because it's next to free, but also because they're offered all sorts of different products. And that's what you need to do with security tokens. You've got it so that it doesn't have to be an exciting project, but it's got to be something that's actually accessible to people. And right now you've got to be a rich person, an accredited investor, and you got to be willing to pay 2.5% to get into something, or pay 3.5%, whatever the prices are, you know, at other firms to get out. And that's not going to give you an active market. So what INX did is we said, you know what, let's create a security token that retail can invest in that doesn't have lockups. And at the same time, let's just bring the price point down to next to nothing. And I think that that's going to be quite a surprising thing for folks. I think they're going to realize that you can get actually a lot of volume on these types of exchanges, because the reality is when you ask about what's liquidity today, it's pathetic. There's more volume that's done in the Italian restaurant downstairs from me in New York City than there is in all of the security token market in New York. And the fact that Kyle's got a website that talks about the volumes, and it's 10,000 for this one, $1 million for that one. These aren't volumes that you can build companies off of or businesses off of.
I actually would disagree with that.
Literally.
If you run liquidity ratios on some of these assets by trading volume to market cap, you actually see that it's decently healthy for a lot of these smaller assets. They're small market cap for sure, but I think that there's certainly a demand for these assets. We're not nowhere near the liquidity that people want. But I actually want to ask your question there, Doug, on that note, do you really think that the barriers to liquidity are due to the fees that investors are paying, or do you think that it's probably more about the asset demand and the interest for what's currently trading? Because potentially, I think that there's more on that second piece, that a lot of the trading security tokens are things people don't care about.
Get someone to trade something every day when they're paying 2.5% just to get into the trade. That's not asking people to trade. What that is that's saying, you know what, I've got a project that needs liquidity, and that I've got people that own this project and they want to be able to get out at some point in the future. But that's not saying we want a tradable asset. And I think at INX, we want to have tradable assets, but also the assets that we're going to be listing, I think are things that are going to be quite exciting to people. I mean, we talk about, you look at our videos on our YouTube channel, but you got a musician's music catalog. They've got maybe 30, 40 million followers. Those followers want to buy and own that catalog. And I think that sort of is the way you get excited people to open up e-wallets for the first time. It's not, real estate, yeah, there's plenty of opportunities in real estate, but it doesn't quite get the sizzle that you'll get from offering out Madonna's music catalog or Taylor Swift's, or you start getting your young artists that want money today and they already have revenues coming in. You find a way that you can tokenize it. These are the types of things that add the sizzle. They get folks onto a website and open up an e-wallet for the very first time.
As we've seen with NFTs, of course. And, the gas fees on Ethereum didn't prevent anybody from trading when they had an asset that they were excited about, right?
Well, I'm not talking about the gas fees in Ethereum. And also the gas fees for Ethereum are going to be less based upon, what the smart contract is. If the smart contract's pretty simple, you're going to have a pretty low gas fee. If you've and if you've got a complicated smart contract, it's going to be more expensive. And we're going to be able to prove that at INX, and we'll be able to show the world. But it's not this. It's not like the cost of Ethereum that's killing this market. It's the fact that in order to trade it, the exchanges charge you fees that are above 200 basis points just to get in and just to get out. And I think that's extortionate.
Who does that? What exchanges are currently charging those fees?
I'm not going to name the names, but just go out there and try to trade on one of these exchanges and look at the fees.
Yeah. Well, I think it's an interesting point.
Okay,
I'm going to be somewhat biased here. I'm going to argue that some of the liquidity is because this is a really new product, and people don't even understand what a security token is, much less the fact that they can trade now, potentially trade real estate. They can potentially trade royalties from their favorite artists. They have no idea that that's even an asset that they can trade. Plus, as you've said, most people don't even understand very much about their financial plan anyway. And I can tell you that as a financial planner, most people have no idea what they're investing in, and they're just trusting their financial advisor. So once we get more people to understand the fact that there are these asset classes, and we know that millennials want more alts, more alternative assets. We know that people are looking for more yield. And once we get, as you said, Doug, the exciting assets like being able to trade your favorite artist, being able to trade their record catalog, that's an exciting asset class. And then you're going to have analysts that are able to take a look and say, what is my potential yield from this? How much this is actually worth? What kind of income am I going to derive from it? And therefore, how does it pertain? How does it look against some of the other assets I could potentially invest in? And from there, you're going to have, investors, you're going to have fund managers that are going to be able to create funds specifically for me based on what my tastes are, based on my age and my risk profile. That's when it's going to get exciting. And that's when liquidity is going to come, when you have people that kind of understand, that do want to open up a wallet and figure out how to trade art and real estate and royalties and NFTs, in addition to Tesla stock and Bitcoin all at the same time. That's going to be really exciting, but it's just going to take a while to get the education there, the fact that people can actually do that now and have a ridiculously personalized, customized portfolio.
Mm-hmm.
So Adam, tell everybody what you're doing to educate people.
To start with, we're trying to educate financial advisors about cryptocurrency, digital assets in general. And as you all probably know, that is quite a road right there, because financial advisors up to this point have not wanted to really get involved in Bitcoin and crypto. There hasn't been a good reason for it. So we have to start from the very beginning. To get to security tokens, you really have to understand blockchain, wallets, security, crypto, all of that to get to where security tokens even make sense. And then we're also trying to educate individual investors really along the same lines. Here's what Bitcoin is. And once we start there, we can go through custody, wallets, and the membership course we're about to release is going to have a whole section on security tokens, so that hopefully investors can understand that. We want to work with security tokens issuers. We want to work with guys like Kyle and Doug to educate the potential investors as to what they're really buying and why what they're buying is not Bitcoin. Why what they're buying is not cryptocurrency. It is an asset. It potentially produces income. It has growth. It has liquidity, all those benefits. But what they're buying is not a cryptocurrency. We're just denoting it using blockchain so they can have some liquidity, so they can have some transparency, and some more options.
Julian, tell us what you're doing, what you want to talk about real estate, and I know that's what you're focused on.
We actually, so you're probably talking about UVAS, which is one of our projects. We abstracted away and have, we can tokenize, trade, and settle custody any asset, not just real estate, it could be private companies, etc. But and we have, and just a quick plug, we also run two other projects, which is Carta.com and Redot.com. One's a BNB marketplace, and then second is a crypto exchange. But to kind of address what Doug was saying and sort of a little bit what Adam was saying, I think the problem actually is not commissions, that are high on exchanges. And I think the problem is potentially not, let's say, that investors aren't aware or don't know what security tokens are, et cetera. I think it's actually regulation. Because in essence, there's a lot of talk, and if you Google, everyone's tokenized half the world, and it seems like it's done before. But once you start actually getting to a deeper level of understanding what they have actually tokenized, where it trades, in which jurisdiction this exchange is set up, what's the path from the actual underlying security to its tokenized form, everything starts really breaking. Really, there's very few sort of properly regulated in the first world, let's say, exchanges that are able to take real assets and tokenize them. I would say the market actually doesn't exist. I think that we're, in this kind of like precursor to the market. And I think that it's not a tech problem, by the way. Again, very much a regulatory problem. Once I think the regulatory issues get aligned, again, the problem is not commissions, but the problem is actually cost borne by by basically charging the issuer, and the cost is all the back-end stuff, the sort of post-trade, which blockchain solves. So in the regular exchange, say NASDAQ, LSE, whatever, Hong Kong Stock Exchange, there's trade reconciliation, clearing, custody. Each one of those actually is not a part of the exchange, unlike crypto exchanges. And those costs are what basically weigh on the issuers. And this is why you have large oil stocks and large banks and now some tech stocks on major exchanges, and which is why you don't have real estate or you don't have mid-sized companies. And this is what, let's say, my exchange can fix, but regulatory clarity has to be there to allow us to custody securities, to allow us to trade them, so on and so forth. And so just sorry for making this long, but basically there's an ATS regime in the US, there's an MTF regime in EU, right, which are the two biggest, probably markets. The MTF regime, no one's sort of set up an entity that does this, and there's a proposal 1 year out in EU to make this work properly. SEC has issued guidance on ATSs, how they can basically custody securities, but FINRA hasn't, sort of done anything on the back of it. So I think we're in early days. Once that is done, you'll have a whole slew of exchanges trading a lot of interesting assets.
Well, it was really just in the fourth quarter that the no action letter from the SEC came out, and then FINRA will follow after. So you're right about that. But I think all the exchanges that we've seen present here today would have an issue with you saying that there's no market. In fact, Douglas, didn't you buy Open Finance?
That's right. Yeah, we did.
So tell us, why you did that, and what you think about the exchanges out there, and is Coinbase just going to come in and take over the market, or what's your prediction?
Well, look, digital securities are sort of like equities in the early stage, and at that time there was a lot a lot. It wasn't just NASDAQ and New York Stock Exchange when equities came out. There were exchanges all around the United States, the Philadelphia Exchange, Chicago Exchange, God knows how many there were. And I think that when you look at the market cap of blockchain today is $1.6 trillion. For equities, it's 85 trillion. For fixed income, maybe 100 trillion. So there's a heck of a big pie. And it's not just going to go to one guy. It's going to go to a whole bunch of different folks. Why open finance? Look, Open Finance were the absolute pioneers in this business. They were the first guys to go out there and get that digital ATS and digital broker dealer. We have great respect for those guys. And we thought, you know what, this is a great way to take something under our wing that also has obviously the licenses that we're looking for. And there's only a handful of broker dealers and ATSs with digital securities in the United States. And so this made sense to us to bring that under our wing and put it next to the crypto trading platform that we have that goes live at the end of this month. And so what we're able to do is we're able to take over the guys that are trading crypto and then have them turn over and start trading security tokens. And so obviously offering a security token that has what you're always looking for, what Adam discusses, which is sort of like, we want to know what you're trading. Heck, I've got a 265-page prospectus sitting as an F1 at the SEC. You can know exactly what you're trading when you're trading my token because I've got absolute transparency. And so being able to take guys from one place and put them on the other and take guys from the security token side and put them on the crypto side, I think makes a lot of sense. I think you got to have that ability to trade back and forth because if you set your business up just doing security tokens, that's a heck of a long runway you have before, as Adam says, people get educated. So you got to be able to have a business that's making money in one pocket while the other one is still sort of suffering. And it's going to take some time, obviously, for folks to really understand what security tokens are. I agree with Adam in that 1,000%. But at the same time, we have to make the exchanges to be such that they're welcoming to people, but not just to accredited investors and not charging huge fees, but to retail as well and let them come on in and say, you know what, guys, you're welcome. Come on in. Here's some things you can trade.
Yeah, for the past.
But how does it jive with existing regulations? I mean, it sounds really nice, but does it really work? And I mean, the grand idea of all of this, look at every single ATS platform that's in the US, how much volume is traded on there. Moreover, how many real assets?
And that's because every single one of them, all they have is a couple of accredited investors coming in there. They don't have an SEC registered
or retail
security that's trading there.
Invest tens of millions every single year in this platform.
And
what trades there?
Exactly. That's what I'm saying. There's a problem with what's been offered, number one, and number two, with exactly how it's being run. And so we're trying to change that. Now, I think it's going to take some time, obviously, but we're going to try.
Doug, for the past 3 years that we've been doing this, the crypto traders do not cross paths with the security token traders. Typically, they're different groups and kind of adamant about that. So how do you see them merging on your platform?
Well, I think that you'll hear shortly about why we expect there's going to be some sort of merger between the two. I can't talk about it right now because obviously we've got an ongoing IPO, but I'm quite confident that there is an absolute huge interest in folks crossing the side and getting involved.
Okay, so how does SPACs fit in here if it's so expensive to issue, a security token and you're doing this IPO and, companies with very little revenue have SPACs, right? So how do you see this fitting into the landscape here of liquidity?
How does a SPAC fit into what we're doing?
Why would an issuer, choose one route over the other?
Well, I think that when you're doing a SPAC on the New York Stock Exchange or NASDAQ, they're normally looking for something with $1 billion market cap plus. They're not looking for something that's really going from a 25 million to, let's say, a $400 million market cap. And so anything that's trading on a security token platform obviously doesn't have the audience that could handle something that's anything larger than $400 million, in my view. Now, that's going to change, obviously, as more folks, as you say, cross the aisle and go from crypto onto security tokens, which is going to come, as Adam says, through education. But obviously, you can't take $1 billion company and have it trade on a platform when most platforms have at most on their security token side, I'd say maybe 20,000 accredited investors. And correct me if I'm wrong, but on the back of that, you can't. You've got to have millions of people trading on a platform in order to attract the larger companies coming on board.
Kyle, what do you think about SPACs?
Oh boy, we could have a whole panel on SPACs. I don't know. I think that SPACs don't solve the main problem of security tokens, which is international access to international assets and investors. You're talking about interoperability between exchanges, as Douglas was mentioning. We're not just talking about the U.S. here. Obviously, NASDAQ and the New York Stock Exchange, I think they made 11 or maybe it was 13 exchange acquisitions in the 2000s to scale up their operations, but we still don't have a market where the New York Stock Exchange can integrate with the London Stock Exchange. Those investors are separate. Those settlement and clearing processes are different. Those asset requirements are different. And I think that those are the realities of the security token industry of connecting the world in this way is totally so much larger of a market and opportunity than what you'd see even just from the traditional public markets from a SPAC perspective, let alone the fact that I think I just read an article that a significant majority of the SPACs that SPACed in 2020 are actually down from their listing prices. I think that a lot of those were honestly just consequences of the fact that those investors were not able to get liquidity earlier. And so a lot of these later private financing rounds combined with some of these companies that are stuck in this illiquid state where they can't quite get to that public listing, but they're way too big to get acquired by a different company. That's a real problem, and it's something that private markets can solve by developing more liquid secondary markets that I think SPACs are just a consequence and maybe a more inefficient way of solving the same problem.
Yeah, I think you're talking about two totally different markets, because with security tokens, you're talking about smaller companies. As Doug said, you're talking about some really interesting investment opportunities that aren't just private companies, that are not just real estate, that they go into places that most people have not really had the opportunity to invest in. And now what you're doing is you're giving them the opportunity. A SPAC is really nice to have that initial funding mechanism. But overall, I mean, look at how many companies are public anyway versus the number of private companies in this country and all over the world that are ridiculously profitable, that so many people in the world would love to be able to invest in, but don't get that opportunity. There are, insanely profitable companies all over the world. And the beauty of blockchain and crypto and DeFi and all of this is opening up the opportunity, and the fact that we can efficiently transfer value and efficiently transfer money that's sitting in my pocket doing nothing to someone who's really good at their job. And that job might be real estate or music or creating some sort of public or private manufacturing company, whatever it might be. But if I can officially get my money to those people that I've never met before, that's what we want, I think, from the security token market. And then we can take that, as the panel before us said, kind of into the DeFi market and go, okay, now that I have this token, can I collateralize it? Can I look at my income stream and figure out how it fits in my overall portfolio? Now it's getting really cool, because now we're talking about incredibly efficient financial markets, which is really what the financial markets are supposed to be, and what the idea, the ethos of Bitcoin was to begin with. And now DeFi is, let's take the internet, let's take what we have now and be able to make it even more incredibly efficient, because we can take out so many of those intermediaries.
Totally agree with that. I love that point.
So we're being told to wrap it up. I think we have some celebrities waiting, and a few last words. So, what do you think? What do you predict is going to happen in terms of build out of custody, settlement, clearing in this market in the next year? Kyle?
I think that we will see some very interesting decentralized solutions. I think that Uniswap has really opened a lot of people's eyes in terms of understanding how smart contracts can leverage, or how we can leverage smart contracts for that settlement and clearing opportunity. I don't know if that will be able to scale at the level that security tokens will need based off of the asset sizes and just the addressable market. But I do see this coming tremendously forward. We see ATS licenses and broker-dealer licenses being approved at a significantly larger rate in 2020 than we ever saw in the 17 to 19 era. And so with that, I think you're going to see many additional players and an additional growth in this market because of the infrastructural rails that are developing.
Okay. Adam, 5 words.
5 words. I think we're going to see a whole lot more of these exchanges and a lot more data aggregation going into these security tokens to inform the value.
Okay, that was more then. But Doug, go ahead.
I think we'll find that custody actually gets sorted in the next 2 or 3 months. And I think that's going to change this landscape absolutely considerably, because we'll be trading security tokens just like we trade Bitcoin.
Okay, Julian.
Much more cynical. So I think that in places like US, oddly enough, guys like NASDAQ will take the lead. They have they bought Second Market, which they, for instance, can run blockchain on on the back end. I think in some of the more, I would say, adventurous countries like Singapore, maybe Canada, or somebody where the regulatory sort of framework might be shaped somewhat earlier between, and not mired between multiple different agencies or sort of interests. Some smaller players such as us can also compete with big boys and basically form something that would work and create an interesting marketplace. But
Okay.
I think, sorry,
Okay. Yeah.
just one last touch. So 5 years out, I think the game really changes, and you do have a lot of players.
Okay,
everywhere.
great. Thank you to everybody on the panel, and thank you, Draper Gorenholm.
Thank you so much.